Good morning, everybody. It's the 11th of July. We are Signal Centre talking ball this morning. I hope everybody's doing well. How are you doing this morning, Steve?
Too bad, thank you.
Good.
Yeah. Tuesday, eh? Turnaround Tuesday.
Indeed. Okay, let's get stuck into it then. So we're going to go through the latest headlines that are in the market at the moment, and then we're going to get looking at some charts. If there are any requests, if anybody's looking at particular markets and they'd like a second opinion, or for us to cast an eye over them and explain what's happening from a technical basis, feel free to post them up in the comments. Okay, headlines first of all then. So the Eurozone Sentix index deteriorates. Yesterday, the confidence index retreated to minus 22.5 for July from minus 17 in the previous month, which was significantly below the expectations of minus 17.9 and the weakest reading since November 2022. Overall, the Federal Reserve stays broadly hawkish. The Cleveland Fed president stated that the economy has proven stronger than expected and that inflation remains stubbornly high. She added that the Fed will need to tighten policy somewhat further to lower inflation and that raising rates again will reduce the risk of more action in the future. This was backed up by the San Francisco head, stating that the economy or the economic momentum continues to build and that the bank is likely to need a couple more rate hikes this year. US rates or yields declined on the back of this broadly hawkish Fed rhetoric. The US yields moved lower with hopes that rates were close to a peak. The 2-year yield is trading just below 4.85%, with the 10-year yield just below 4%. The US dollar retreated quite significantly yesterday. We'll come into the chart on the impact of this shortly, but the lower US yields were an important element, dragging the US dollar lower during the day, with risk conditions also attempting to stabilise. The Bank of England are watching wages. The Governor, Andrew Bailey, commented that inflation and wages increases at current rates are not consistent with the inflation target. He did, however, add that the underlying inflation pressures are set to recede and that some of the previous tightening has yet to hit the UK. The wages data that came out in the UK this morning was stronger than expected. The labour market data recorded an increase in unemployment rates of 4% from 3.8%, however, but the headline increase in annual wages strengthened to 6.9% from 6.7%. The wages data maintained expectations of a hawkish Bank of England stance, so still the possibility of further rate hikes. Talking of rate hikes, we've got the Reserve Bank of New Zealand announcing their policy decision on Wednesday. Consensus forecasts are for the bank to leave interest rates on hold at 5.5%. Okay, let's get into some charts. Already a couple of requests coming in, so we will get to those. In the meantime, Steve's going to run us through a look at Bitcoin.
Yeah, sure. Here we go. Bitcoin trading within a range and within a major resistance level. We can look at the weekly chart here. This summarizes Bitcoin over the last 3 years. We can see breaking through that 20,000 level all the way up. The all-time highs, a bit of a distant memory now, and this the bottoming formation that we are forming here, which has a measured move target of 35,000. Now this is playing out quite nicely at the moment after the week of 19th of June. But since then, it's just been sideways, sideways, sideways. We can see it here in this this channel formation that we've highlighted. High up at 31,500, the low down at 29,500. Potential for a double top formation here. That's one to look at. Also, the opposite side of the coin, or a contrarian idea to that, is a bullish flag type formation. Not exactly a classic bullish flag, but something along those lines. We can see MACD on the bottom here. Momentum has slowed and gone sideways. So this momentum MACD indicator, or MACD, has moved lower. Seems to be stabilizing at the moment. So trying to build up a little bit of potential for the upside, maybe. Still feels like early days. On the 4-hour chart, we are challenging the 4-hour Ichimoku cloud, which has been very much sideways for the last week. And on the hourly chart, we have broken above it. You can see quite recently, yesterday, around about the close of the markets, 8-9 o'clock, we had a big spike higher, although we formed a shooting star, and that will dominate until we get a break through the resistance there. So a little bit of a support coming in with this Ichimoku cloud here, and yeah, a little bit in the middle, sort of no man's land at the moment, Bitcoin, waiting for that next boost of momentum, whichever way it comes from. XRP, that's trading still below that 50-cent level, although it had a decent day yesterday. Nice little up move, and yeah, it's still sitting. We're still getting these higher lows, so nothing much to talk about there. Let's have a look at commodities. We'll take a look at gold, which is a little bit more of a solid asset you can get your teeth into. We've had the move lower. This the move down to 1893. That was the 29th of June. Since then, we have had this. Looks like an inverse head and shoulders formation. I think I did draw it on the 4-hour chart. Let me take a look here. This sort of formation. So we are at quite a decent level, and we've made a move through that level this morning. 1935 has been quite a pivotal level, both as a support and as a resistance. So at the moment, that is acting as resistance. It's been up through that this morning. 1938 is the high, 1938 and a half. We're currently below it, but potentially we're building up to a move higher. Now, I always like to look at the dollar index, and normally we do find a little bit of a comparison with dollar index. Obviously, gold is based in dollars. Dollar weakness will lead to gold prices moving higher, dollar strength the opposite. And we can see we've broken down through a bit of a support level here at 102.18. Joe will dive into the dollar index a little bit more, but we are under pressure. So that is giving us a little bit of positive influx into this short-term price action in gold. So yeah, maybe a gun-to-head trade idea, just sitting up there. Now, the measured move target for this, I haven't done it yet. Okay, let's do it now. We just take the low from the head up to the neckline and extend higher. We can see 1979 is the measured move target. Funny enough, 1979 was the high from the 2nd of June, and there was multiple touch points before that as well. So that's quite a key resistance level. So that could be nice, little classic trade to focus on in the gun to head. Maybe I'll do that. Yeah, sitting below resistance at the moment. If we do get above 1935, I'd be very positive to the upside, but we'll see if that does a job or not.
Very much, Steve.
I'll just have to take a look at oil quickly.
Okay.
Oil trading between that range at the moment. Last 3 out of 4 days of price action have been positive, today's included, and we're breaking up, trading in this band of or this range, $67 up to $73.50, and looking to heading towards the upside. So looking quite positive on oil at the moment. Also, hand it over to Joe now for the FX, and then I'll take a look at a few indices afterwards before we go into the gun to head.
Okay, thank you very much, Steve. So yes, dollar index, this is on the move, and we can see that it's broken down through some pretty important support levels. So really starting from this move on Friday, a big bearish move to the downside, we come up against support at 102.23, which is only a minor area of support. And we had a next level of support down around 102.00. So we've sliced through that. Yesterday we closed below that level. So that was the lowest level that we've seen on the dollar index going back to May the 11th. And today, we followed through on the downside, down by 0.2% as things stand. So getting a bit of a kick in at the minute, 4 consecutive down days. Assuming today closes lower, obviously still a way to go. But this really now brings into focus this level of support down here. So this is between 100.82 to 101.01. So this is where prices look to be headed in the short term. And these are the lowest levels we've seen for a fairly significant period of time, going back really to February this year. And again, it was tested in April. So potentially in line for another test of that level. Now, if that level fails to hold, it brings into focus this 61.8% fib level. On the left-hand side, we can also see some previous highs here, which could act as support. So this looks to be the area that ultimately will target if this support level fails to hold. So very much on the back foot. And as a result of that, we would expect to see the euro dollar on the front foot. And we can see prices have reacted quite nicely from support at around 108.44. Decent move to the upside. We're now challenging these swing highs from the 22nd of June and attempting to break through that. We've also got a high dating back to February here at 110.32. And then above that, we're challenging these previous highs that were posted in May up at 110.93. So looking pretty strong at the minute. We do have this bullish channel. So at some point, we will be looking to challenge the reverse side of that, but that could come all the way up here at this 61.8% fib level. So at the moment, it is into pretty significant resistance. Still needs to do a fair bit more before we can get too excited about this. Still the potential for a top to have formed here. We need to get through these resistance levels before we can get too excited about follow through to the upside, but certainly looking pretty good in the short term. Let's take a look at cable. That was holding up nicely in comparison. It broke up through this resistance level here. That was at 126.66. We saw a nice punch through back here in mid-June. Nice pullback to the trend support line, and that has attracted fresh buying interest. And we've taken out these swing highs from mid-June and now trying to move towards resistance at 129.81. So looking pretty strong and pretty robust there. Let's take a quick look at dollar yen, see what's happening there. Obviously, it's been one-way traffic on this for a number of weeks, but it rallied into resistance here at 145.10. We can see as a previous low there from October and another touch point in November. We rallied into that pretty much to the tick, and then that triggered a decent sell-off. So we've seen 4 consecutive down days, assuming today closes lower. So that is very much on the back foot. As we see a little bit of yen strength and continued dollar weakness. We've got support around 139.58, which is close to where our analysts are looking to buy it today. So that looks like a reasonable level to consider maybe a speculative long. Let's take a look at Aussie versus US dollar. That's one of the requests today that have come in from one of our viewers. So at the minute, this isn't really behaving the way you'd expect, given that we've seen such weakness in the US dollar. We can see that prices are pretty choppy here. So if we compare this to euro dollar, sterling dollar, that's been moving to the upside pretty nicely, taking out these highs that we posted in June. But the Aussie currency is still in a bit of a holding pattern, struggling to break on up. Potentially, we've got a bit of an uptrend in place here. We can see that there is a sequence of higher lows, but there's a big area of support around here between sort of 65.20 to 65.66, but we're not really breaking through to the upside at the moment. Let's take a quick look at the intraday here to see if there's anything shaping up. We can see here that there's a pretty significant area of resistance here on the short-term chart, but potentially a nice looking bottom pattern. We could argue maybe that there is an inverse head and shoulders. We're assuming this is the left shoulder, therefore that's the neckline, this is the head, that's the other neckline, and then we have the right shoulder here. So potentially a head and shoulders setting up. In order to break through this and complete the pattern, I think we need to see a breakthrough this level here. I mean, technically it would be the neckline here, which we're trading at the moment, but if you wanted further conviction and confidence to go with this, my preference would be for a break above 67.00. If we can get above that, then we will complete this bottom pattern and we can start looking for higher prices. So we can take a measurement from the head to the neckline and project that higher, and that's going to give us roughly a target of around 68.10. So really nice potential upside on that if it can break above 67.00. Let's take a look at New Zealand dollar, US dollar, just ahead of their interest rate decision overnight. Again, it's pretty similar to Oz in that we're pretty choppy. We haven't managed to break out through or get close to these June highs. In fact, the June highs are only here. The May high is all the way up here. So still plenty of work to do on this one. Still not really playing ball like some of these other currencies. So further weakness in the commodity currencies, which is being dragged down by weakness in US dollar. I'll leave it there on the currencies, Steve, because there's no other requests, and you can run through some indices if that's okay.
Yeah, no worries. Right, start with FTSE. FTSE's been on a pretty decent downtrend. We can see that the high we peaked out on the week of 17th of April. Since then, it's been one-way traffic really overall. We've just landed at quite a significant support level. I'll bring it up on the daily chart to give you a bit more view on it. The initial support level at 7,300, we sort of sliced through it on the last Thursday, and we've continued to remain below that level of 7,300. So that is a short-term resistance level because it was quite a significant low before on a multiple occasions. We did have this spike lower from the 20th of March, and that landed at 7,200. So yeah, that's the next support level that we'd really keep our eye on, and we're just trading sort of like slightly to the higher end of that range, 7,200 to 7,300. Showing a bit signs of the downward price action stalling the last couple of days of candles. Oh, excuse me, just getting the mosquito. Have been slightly bullish. You can see bullish hammer here, and then we got a doji candle from yesterday. So showing signs of stalling on the downside. So maybe that 7,200 level may be a bridge too far at the moment. The other indices, just looking to take note of, is I've got Germany 40 up here, and we've got a head and shoulders formation. We're retesting the break of the neckline now. Have done 15,750. That's the area of that break. Significant resistance at really around this 15,700 level. We're trading just above it at the moment. So short-term basis, we can see 4-hour chart still in that downtrend. We can see this sort of like area of price action here should act as a bit of a resistance along with this Ichimoku cloud. So still mildly bearish on those two indices, although FTSE's showing a little bit of a sign of stalling, so watch out for that. Take a look at the US market, see what they're doing. And we can see on the weekly chart, we've got this downward trending resistance line, four touch points here. So a big significant one. So that 34,500 level for me is going to be the pivotal moving forward. We had the price action start on the back foot this week after yesterday's almost bearish engulfing candle. And we've made good progress on the upside. And if we sort of merge this upward trending, although it's quite an acute upward trending support level, we've got 4 touch points here. So really downside, I would be looking at this 33,380 level or 33,350 to 33,400 level as support, and a break of there should end up leading to further downside and resistance quite firmly at this 34,500 level. And that is obviously that we've got this overall, I'll get rid of that, we've got this over the fact that these are posting lower highs makes me think, and this is quite an acute angle, makes me think there's more downside here. Nasdaq has been outperforming, although it's struggling to get through this 15,273 level. A couple of times we've hit that. If we look at the short-term price action, we should be aware really of maybe potential for a double top. We've got this top from Friday and the top from Wednesday and this neckline in between. So although we're a way off, consider the 14,700 as a early warning system for a reversal. At the moment though, price has been supported around about 14,950 support. S&Ps, levels to watch really. This nice little turnaround from Monday's early price action, bullish hammer led to price action moving higher. Let's drill down into it. You can see here, although we are stalling as we speak. So we've had 24 hours of positivity, but really being dominated by these lower highs. At the moment, that's about it on the industry front. I think I've got in my head what I'm going to do for gun to head, so I don't really want to talk about anything else.
Okay, fine. So gun to the head trade. So this is where Steve and I pick trade ideas live on the stream, as if we had a gun to our head. We pick ideas right now, both with stops and targets. Risk reward ratios must be better than 2 to 1. These ideas will be closed out at 9 o'clock UK time, just to avoid any overnight price action and mean that we've got a clean book going into tomorrow. And from a risk management perspective, we risk 1% of trading capital. Steve, if you can bring up the trading account just very quickly for us to have a look at. It's not been a great time of things of late. Our balance is at 1,735. We started at 2,000. We've been chopped around. Markets have been quite challenging. But we're still in the game and got ultimate belief that we will be able to pull this back round. We've just got to keep sticking to our rules. Are you going to buy that, Steve?
Yeah, I am. It doesn't look like a buy, does it?
Go on. Talk us through it.
It doesn't look like a buy now, does it, Joe?
I was looking at it as a sell potentially.
Yeah, no, I mean there's good reason you could sort of like look at this as a sell. I've been through it. I'm sort of I do sort of like feel that I mean the dollar's had a like obviously the move to the downside, but is that it? Is the dollar going to come back again? This is what we do on a daily basis. Try and get ideas that are good risk reward. Now this for me, I shouldn't really be buying it here. I'll give you a reason why. This is the neckline of the inverse head and shoulders formation. And really you should be buying it when it closes above that neckline. The only caveat to that, I would say, is we have to propose a trade idea. This is why it's very difficult for this gun to head trade idea. It makes it more difficult. If I was to sit here and say, right, okay, I'll set a buy order, buy me when this closes on a above the neckline on a 4-hour basis or an hourly basis, something significant. But we haven't got that. What's it called? Luxury. Should we call it a luxury? Who knows? So I'm looking at 1% risk. That's 3 units, and the stop on that is quite tight. 1923, $7 away. Targeting a move to 1956. I don't mind that because for me, we've got plenty of room to the upside. 1956. Yeah, decent level to target, maybe even higher, but I'll just leave it at that. It's come up populated at that. I'm buying at market, which is trading around 1930 at the moment. My stop is at 1923 and targeting 1956. I'm going to go for it, Joe.
Okay, I was
Bang, he's done it.
looking at a sell on that, but I will leave it and maybe
No,
look at something else.
this is the thing. I'm looking at what is it, a 3.5 to 1? I can't remember what it said. Risk reward on that. You could look for a sell, and
all right, let's do it then,
I
shall
shouldn't
we?
put you off. Yeah, why not?
Okay, so I'm looking
Oh,
at it.
actually, if we do that, doesn't it just cancel it out on the?
No, there'll be separate, different size orders, won't they?
Oh, okay, maybe.
And they'll be separate, I hope. Anyway, so this was my chart on gold on the daily. So looks like there was a decent uptrend in place. We broke that. Looking then as though we had some support in place around 1932, broke below that, and now trying to overcome it and failing at the moment. Can totally see what Steve is seeing on this intraday setup, a large potential head and shoulders bottom on the hourly formation. But the fact that we've failed into this level today and posted such a strong reversal over the last 24 minutes is a little bit of a concern for me. So I'm going to play the opposite side of this, suggesting that we've seen a bit of a swing failure here and prices are going to dip to the downside. I also, looking at the dollar index, has had a really horrible move to the downside, as we can see here in recent sessions. And I'm just wondering whether or not we are going to see the buyers step back in on this. So this is the daily. Based on this, I mean, it doesn't give me too much hope because it's broken down quite significantly through that support of 102.00. But I just think maybe it might be a little bit overdone in the short term.
You could sell Eurodollar instead if you wanted.
It doesn't look as interesting to me, I don't
No, it
think.
doesn't, does it? No.
I mean, it doesn't look as weak. The other one I was looking at was New Zealand dollar versus the US dollar. And the reason for this one was because the US dollar has been weak, but this is really just not taken advantage of that. It's continuing to trade in kind of a bearish formation by the looks of things here. In fact, let's just kind of draw that on. We can see that there is a sequence of lower highs. Potentially in this kind of formation, resistance above around 62.61. So in fact, I'm actually going to go with this rather than gold because I don't want to step on your toes. But it's a similar kind of thing, really. We can see there's a potential for a bottom forming here, but it's failed into resistance here. And the fact that this is underperforming the most against the US dollar just gives me a bit more confidence that it's going to play out. So I'll sell that at 61.96 roughly. My stop loss will be 62.27, so just above the highs that we've posted overnight. We do have the Royal Reserve Bank of New Zealand publishing the latest interest rate decision, but I'm going to be out of the trade before then because that's going to be around 3 o'clock, I think, a.m., 2 a.m., 3 a.m. tomorrow morning. So I'll be out of it by then, hopefully avoid that volatility. Target will be 61.32. Is that enough for a 2-to-1?
Just 2-to-1.
Yeah, do it quick. There we go.
Oh, right on the boundary that was.
Yeah. So that's 2 trades today. Steve buying gold, and I'm selling New Zealand dollar, US dollar. Okay, good luck if you're following. Obviously, it's been a pretty rough ride for us of late, so maybe don't go too mad on it if you do like the setups there, because our form hasn't been particularly great. But you never know; these could be the ones that turn it around.
Yeah, lovely.
Okay, so day ahead, we've got German ZEW index, which is due out at 10 a.m. UK time, and then I was right, it's 3 a.m. Overnight, we've got the Reserve Bank of New Zealand's rate decision. So I do have a New Zealand dollar position on, but we'll be out of that trade at that time to avoid that level of volatility and craziness that we can often get over rate decisions. So keep that in mind. For the rest of the week, so tomorrow we've got US consumer prices. So that'll be the latest read on inflation, which will be very interesting. These have been very well watched numbers, along with sort of standard ones that we watch, such as non-farm payroll and, of course, Fed minutes and Fed decisions. And we also have the Bank of Canada with their policy decision as well. So keep that in mind tomorrow if you're looking at any Canadian dollar pairs today, or anything linked to oil as well, because that can often be quite highly correlated. So that's it from us. Thank you, everybody, for watching, and we'll be back tomorrow.
Cheers
No, we
all.
won't. We'll be in the office tomorrow. Maybe we're back on
Oh, yeah.
Thursday.
Yeah. See you then.
Bye-bye.